There's a company called ONELOGIX came out with its numbers. These are to the year ended 31st of May. Revenue up 20% to $1 billion. That's the first time they've gone through $1 billion on their revenue, that is. Operating profit up 10%. Headline earnings per share up 17%. And the company over the last year has moved to the JSE's main board. On the telephone now is the CEO of ONELOGIX, and that is Ian Lawrence. Ian, that's a milestone, isn't it, $1 billion?
Yeah, well, I mean, one mustn't be too over the board about it because it's a kind of a vanity figure. But nonetheless, you know, if you crack that sort of number, you're happy with it.
It's very good to be vain occasionally. Solid organic growth. There's been a couple of... It's solid organic growth, and that is very surprising. And I was watching another CNBC Africa program this morning, and there was a panel of people saying South Africa's not doing very well, and yet there's well-run companies coming out with good sets of numbers, notably in the logistics space. How have you done it?
Well, I think we've done it because, and this is a kind of a general motherhood and apple pie statement, but we've done it because we've got good management. You know, we've got margin squeeze. Everybody's fighting to protect their margins, so it obviously has to have a knock-on effect in an economy like ours. So you've got to be smarter in terms of the way in which you deliver, much more productive. So I think we get that right. And our organic growth, as a result of that kind of mindset, has been fairly strong. But we've also made some acquisitions. We made 3 acquisitions, in fact, during the year. Two of which were sizable. One which is the biggest we've ever done. And we're fairly clear on how and what we should acquire. And I think that's it's becoming part of our competitive advantage, because I think we've done pretty well with that. And then, of course, like a lot of other companies in South Africa, we're looking to expand into Africa. So I guess it's those 3 things, Lindsay, that describe how we've done it.
Yeah, let's go back to those acquisitions briefly if we can, because they're very, very different. One is a tanker business, and it's a big business. The other one is a driver behaviour business, which tells me that your diversified portfolio is continuing to become more diversified.
Correct. The United Bulk is the biggest one that we did. It's a bulk liquid business that moves a food-grade product, it moves chemicals, and it moves liquid petroleum gas around the country and increasingly into Africa. So that kind of ties in with what we call our specialized transport segment. So that fits in very comfortably with that. But we're creating another segment, as you said, and that we're calling logistics services. And we're providing services to the logistics industry. And Drive Report certainly fits into that category. What it does is it provides a mechanism, a very clever mechanism, that allows you to manage and watch your driver performance. And driver performance, well, I suppose could be argued is one of the last frontiers of the management process in the transportation industry. So we see lots of potential for both of them, and Drive Report is a very exciting one for us.
You talked about the specialised transport division there with reference to the acquisitions, but you've got some old established companies within that division, vehicle delivery service and commercial vehicle delivery services. How have they done? I know margins under a bit of pressure.
They've done well. We refer to VDS, Vehicle Delivery Services, as our university. We've created a huge skill base, not only in terms of people, but also in terms of the processes in which we run the business. And we're able to take from that business and push it into the new businesses that we've acquired and created and done that. So VDS does very well. It's also, as you said, it's an old business. So we classify it as a mature business in a relatively mature market. So what it's doing is it's really fulfilling the role of a traditional cash cow, not only in terms of generating cash, but also, as I said, the skills and the processes which we were able to transpose within the group. But yeah, they've done well, and they'll continue to do well. You know, the vehicle industry in this country is a strong component. It's 6-7% of the GDP. I mean, that industry has grown a lot in the last 2 or 3 years, and it's probably going to go sideways and maybe taper off a bit. But nonetheless, it's on quite a high base. And as a result of that, those 2 businesses, VDS and CVDS, will do well in the years to come.
Ian, we'll have to leave it there, but thanks very much for your brief time.